In this week's episode of the Marketing Expedition podcast, we have Clay Space. He was born and raised in Albuquerque, New Mexico, and spent a short stint in LA and then moved to Idaho last May of 2021 in search of an area that was more chaos resistant. He has an extensive experience in the media entertainment industry, and he's been an avid participant in the Bitcoin ecosystem for 8 years. And today he's an investor and Bitcoin educator. We have a lot to learn from Clay, just listen up. But before we get to his interview, I have a couple things I want to share with you today. This week's episode is brought to you by Stash. Become an investor. Get the Stash app that makes money, investing easy and affordable. You can add cash to your Stash account and we'll give you a $20 bonus stock if you use my link. Go to peppershock.com/offers and click on the Stash app to get your offer today. And now it's time for the Marketing Essentials moment, the basics that you need to help you build your brand and your bottom line. And today we have the 13 tips for developing an email marketing campaign. And click the link in the show notes for more. There's a blog post all about this with more details for you. When do you want to send these emails out? Who is it that you're targeting? What is your goal? Number 2, what's your goal? Number 3, get a good writer if you're not one, right? Anybody on the team, are they good at writing, generating good content? If not, of course, Peppershock can help you with that. Number 4, what is your key messaging? In other words, what is the main message that you are trying to convey to your viewer? Is it highly competitive? Is the goal to develop the marketing message that sets you apart from the competition? Or maybe it's a product or service that you have to offer, or maybe it's just providing value to your readers. What is it that you want to accomplish with your messaging? Number 5, design matters. It really does. And being able to understand how design works in your email marketing, making it legible on a mobile device, if it's a tiny screen, it all matters how you can have that design be eye-catching and memorable and make it so that people want to open your message. Number 6, what are your metrics? What is it that you want to accomplish by sending this email? How can you measure success? Is it the number of opens? Is it the number of people you send it to? Is it the number of click-throughs? Do they do something? Do they actually utilize that call to action that you're putting in your message, or some sort of awareness factor? What is it that you want them to do, and how can you measure those results? Number 7, create a subscriber preference center. Now, just before they want to unsubscribe, maybe you can give them some options before they completely unsubscribe, right? Maybe that preference can be that they just want to hear from you maybe once a month or, once a week, whatever that preference is. Give them those options before they just completely unsubscribe. Number 8, know your audience. Who is your target customer? Who is it that you want to send this message to? What are they going to do? How are they going to see it? What's some common phrases that are going to capture their attention in the subject line? And of course, number 9 is study the art and science of subject lines. If those emails are ready to send, but you're using all caps, for example, that's a red flag. Make sure that the information that you're using in the subject line is something that will not go to spam, that will get seen and sent to their inbox. Number 10, proofread again and again. I always say 2 sets of eyes on everything before it goes out the door, and not your own set, because you've been looking at it so much that maybe somebody else will see something that you didn't see that could be construed as different or wrong, or maybe there's some grammar or maybe a misspelling, or maybe you're using the wrong there, and they are, right? Number 11, avoid spamming. Automatic detections will forward those messages to spam folders. So you need to make sure that you're not doing things that are not legal, first of all, but second of all, making sure that it's not going to get into that spam folder. Number 12, data analysis. Now that you've sent your messages and the feedback is in, see what's working, what's not, what more content can you do, and along the lines of what people actually want to look on and click on, right? And number 13, what can you improve? After all that's been said and done here, what can you take away? What are you excelling at in your data analysis? And understand how it's working, when to send that message, when to, continue to follow up or not, right? If you have a series or a sequence of emails, make sure that you're diversifying and find out what the interests are of your target audience. Be useful, entertaining, memorable, all of those things. And if you need help, contact us. We can help you with this process that you're going through to make sure that your email lands where it needs to, does what it's supposed to do, and that you can continue to improve upon what you're doing. All right, without further ado, let's get into The interview with Clay Space.
Welcome to Peppershock Media's Marketing Expedition podcast, keeping you up to date with the latest in marketing and advertising. Now here's your host, Ray Allen.
Welcome to the Marketing Expedition podcast. I'm your host, Ray Allen. I'm the president and CEO of Peppershock Media and the founder of the Marketing Expedition community. And today's guest, we have Clay. Clay, tell us who you are and what you do.
Yeah, well, I've done a lot of things, but right now, mainly I am working in the community to kind of, I guess you could say, spread the word of Bitcoin. So I run some Bitcoin groups in town. And then I'm also kind of involved in the venture capital scene.
Yeah, and that's fairly new for you, right?
Yeah, quite. I spent the last few years in Los Angeles kind of working on a small media company. And when COVID hit, I was like, get me the hell out of here. and moved out to Idaho.
Yeah, you and lots of other people too, right?
Yeah. It's a little disappointing, but I definitely have become, at this point, one of those people who sees the California plates and is like,
yeah,
get them out of here.
Go back home. No, I know that's definitely happening. People are moving and figuring out that they can work from anywhere at any time, and it doesn't necessarily matter where you live anymore, right?
Yeah. No, I think one of the things we notice here a lot, and I think it's happening everywhere else too, is you have these all these restaurants that are just, they can't find any employees. And I'm thinking that maybe part of the issue is that why would you work at a restaurant if you can work in Seattle, but you can live in Boise, right? And you'll make more money and you don't have to necessarily leave your house. Yeah,
we're definitely experiencing people from working from home. You're in the studio today and there's no one here because they all working from home or out on a shoot or doing something today. You're right. And more, I think people are going to use the Zoom and all the different things that you can use now to be able to work from anywhere.
Right, yeah.
So, okay, let's back up. In LA, you had a small media company. What did you do?
Yeah. So this kind of started back in 2016 or maybe even earlier. I, right out of college, had been very fortunate to have a few acting credits and actually get published by Scholastic for some of my writing. And so kind of right out of college, I was like getting paid to be an artist. And I was thinking, man, this is probably my path. At the same time, I'd also stumbled into the blockchain ecosystem and cryptocurrencies. Yeah. And I became addicted to those as well. And it became pretty clear that I couldn't do both of them at a high level because one of them, looking at charts all day is very analytical. And then, writing stories is a completely different side of your brain. And so I kind of came into this issue where I needed to either choose one or the other or find a way to combine them. So I ultimately started a project in 2016, 2017 that sought to kind of combine these two things, where we created this science fiction world and created a token. And within our world, the characters used this currency. And so when we created the currency, we gave it to our audience. We allowed them to use that token to interact with our experience.
And that's kind of what's happening now with the NFTs, right? We have to explain a little bit about what's going on there, huh?
Yeah, NFTs, and actually it's kind of funny, is as I was looking to pivot the project around 2018, I had looked into NFTs at the time, and we were looking at it from a perspective of basically looking at it as kind of like digital merchandising. So Disney, when they create a film, a lot of their revenue comes from selling toys or selling t-shirts or what have you. And so we were looking at, could you basically take that merchandising and make it digital? And I think that there's absolutely some plays there. I think there's actually, of course, the part of the story that I haven't mentioned yet is kind of the experience of me creating this media company and using this token. Made me really realize just kind of how misaligned a lot of the incentives are within the cryptocurrency industry, and really turned me off from a large part of the industry, which is basically these tokens, things like Ethereum, and a lot of the other ones. But it forced me down this rabbit hole of what money is. And so it brought me back to Bitcoin. and made me really appreciate and understand why Bitcoin was created. But NFTs are wholly different than kind of Bitcoin or some sort of monetary asset. NFTs are really trying to be, I think in the best way to put it would be digital merchandise. And so there's absolutely, if you think of it like from the perspective of a video game where you could have some sort of sword or piece of clothing that could actually be interoperable between games. So you could take that and you can move it between various video games. I think that there is probably a use case there. Yeah. And there's probably, what makes it hard, I think, from a perspective of investing in it and why I don't personally invest in NFTs is I think that ultimately what you'll probably see is you'll see various NFTs that were created either by anonymous developers or just have a large network effect because they've been around for a long time. They have a lot of people who own them, that ultimately video game developers come in and say, hey, look, there's a community of 1 million people who own these NFTs. Let's build a video game where they can then port those NFTs into our game. And so they're basically, you'll have, it's kind of like the opposite of what we have today, where you have video game makers who create a video game and then you go to the video game and you use the assets within their game, and then you can't really take them out. Right. In potentially in this different model, you would have video game developers basically marketing to a network that already exists, and then actually kind of kowtowing to that network. So they would be creating games and assets that play into this already pre-built network.
Right. And let's back up. What does NFT stand for?
Non-fungible token.
Right. And then let's also back up for those that don't know necessarily what Bitcoin really is. I mean, I'm sure people have heard about it, but let's share a little bit about what Bitcoin is, where it started, how it came to existence, and why you're so involved with it.
Yeah. Well, and so that's a really big story, actually. But I think the most important aspect to understand about Bitcoin and probably what got me interested in the space when I first started is just the supply cap for Bitcoin. So Bitcoin only has 21 million tokens. There will never be more than 21 million tokens, and the majority of those tokens have already been created. And so that's really, I think, an important thing to understand about Bitcoin, because there's not a lot of things in this world that have this this sort of set supply. Right. And so if you look at other assets, anything from Apple stock to the US dollar, there is no guarantee that they will not inflate the supply of those assets. And so having something that has a set supply really does, in a way, completely change the game. It's not really something that humanity has had ever in our experience. Right. And so I think that we're probably undervaluing just how important it is to have some sort of a digitally native asset that has a fixed rate of supply.
Right. And now you can purchase things with Bitcoin, and that's also creating some tension, right? Because with the Tesla, being able to buy a Tesla with Bitcoin, and so now there's controversy around it, right?
Yeah. And it's kind of like an age-old discussion about what is Bitcoin's use case. And so what was the creator of Bitcoin really kind of intending for the Bitcoin network and for his invention? And so, yeah, there has been this tension between is Bitcoin an asset that you go out and you spend, or is it an asset you hold? And these are kind of, to an extent, totally different things, and it gets, a lot of it gets into kind of like our relationship with money, and so there is a field of thought for money in general that, and especially in kind of today's world, around consumption. So around like this idea that the more people spend, the more they consume, the better it is for the economy. The more we're able to essentially kind of create these revolving doors of capital growth. And what that argument kind of fails to appreciate is this idea of holding out on your consumption and waiting for better prices, waiting for better opportunities to essentially purchase goods. And so kind of a good way, I think, to look at it is if you are a farmer and your consumption is basically collecting the fruits from your field. If you overconsume, you don't have enough fruit for the next year. You don't have enough to farm for the next year. And so you have to have some form of storage. You have to have some form of, look, I'm not going to consume all my food this year because I know I'm going to need it for the next year. And so today's world, we're very much focused on saying, hey, let's consume as much as we can today, and we'll worry about holding it and storing it tomorrow. And so what Bitcoin's really ultimately trying to solve is that issue of storage and kind of trying to create this asset where you could basically take your Bitcoin, you could put it somewhere, and you could go to sleep. You could wake up 100 years from now, and that Bitcoin would still be accessible to you. And so in that case, you're kind of, I'd say, kind of breaking that circular consumption circle, so to speak.
Right. And it's interesting now that more people are accepting or thinking about it as an investment strategy as part of their portfolio, right?
Yeah, definitely. And we're seeing institutions beginning to get on board. Probably one of the more bullish aspects for that is you see insurance companies buying Bitcoin or looking at allocations to Bitcoin. And what's so exciting about that is insurance companies are kind of the most conservative companies on the planet. And so if they're the ones who are looking at Bitcoin and saying, yes, we need some sort of allocation to this, I think that the narrative around Bitcoin is absolutely starting to change, and people are seeing it as a much more conservative asset than maybe we have in the past. And as one of those assets that, yes, you could hold that and you could disappear for a couple of years and come back, and it doesn't matter what has happened in the world. It doesn't matter what institutions have gone out of business or disappeared. As long as you took the precautions and the measures before you left, you still have access to your money.
Right. And only spend what you can afford to lose.
Right. Yeah.
Let's talk about that, though, because Bitcoin has been so volatile and it's up and down and all around. Tell me more. What's going on?
It's probably not worth speculating too much on price, just because it's kind of this fickle beast, and it's hard to tell what exactly factors into the price going up or going down at any time. There's certainly been a few interesting factors kind of at play right now, and I don't know how in depth your audience has maybe dived into the Bitcoin space or the ecosystem, but kind of some of the big I think developments recently have been around Bitcoin's energy consumption and the ESG debate, and then also specifically around China, and China basically taking a stance that it's going to be banning Bitcoin mining. And so for instance, for Bitcoin being banned in China, what's kind of interesting about this short term is it means that you have a lot of network capacity, a lot of these miners, which are basically these computers that take energy and convert it into Bitcoin. They are leaving China and they're trying to find somewhere else to go. And there was a lot of miners in China. China overbuilt a lot of its energy structures over the last 40 years. And so there was a lot of free energy in that country around the dams and these areas. And so there was just massive incentive for Bitcoin miners to set up shop in China because they got a lot of really cheap and if not free energy. And so now that China said, nope, we want you out, they're having to move. And so that's having this sort of strain, you could say, on the Bitcoin network as far as you have miners who a lot of their cap tables are denominated in Bitcoin. A lot of their holdings are in Bitcoin. And so when they have to now move to another country and move, millions of dollars worth of equipment, they have to sell Bitcoin in order to do that. And then there's also just kind of the general sort of FUD around, hey, look, we can see in real time how much energy has come offline of the Bitcoin network because of this mandate. On the plus side, though, the Bitcoin network proves very, very resilient. And so the network itself is not really impacted. It continues to tick along just as fine. It actually gets rid of one of the larger pieces of FUD around Bitcoin, kind of this, attacks on Bitcoin, which was that China controlled Bitcoin. China's now basically banned the mining of Bitcoin. And so they've essentially, you could say they've essentially kind of banned themselves from the Bitcoin network. Right. So over time, we're going to definitely see a lot less sway from sort of China around the Bitcoin network, which I think ultimately there should be no one country that has a majority stake in the Bitcoin industry in any aspect of Bitcoin.
Right. So it's got itself away from it so now no longer will it have that rumor that it's owning it. So that's good.
Yeah. Okay. Then the other part of what we're seeing around kind of the energy sector. So kind of also tied into mining. So Bitcoin has this, the way that Bitcoin operates, it operates under what we call proof of work, which is basically you have these miners that take energy out of our universe, out of our reality, and they convert it into this token that exists in a completely different reality that we basically cannot be inside, we can only interact with, right? Which is the digital ecosystem. And so proof of work is really important in the sense that it is the way that we essentially tie the digital ecosystem into our own reality. And other attempts have been made at essentially trying to decouple reality from an ecosystem, from this other ecosystem. And they ultimately tend to fail. And so I could get into how we've kind of done that with our US dollar or with other currencies. But I'll stay on topic right now with the energy. And so there's this large argument going on with basically how these miners do this is they have to consume significant amounts of energy in order to essentially convert this Bitcoin. And it has two kind of main ways that it helps the Bitcoin network. One is the more energy that's kind of engaged with creating new Bitcoin, the stronger the network is. So the harder it is for somebody to come in with a whole bunch of energy and attack the system. Because if you think about it, if you want to interact with Bitcoin at that layer, you have to spend significant capital to find an energy source, basically put up computers next to that energy source, extract that energy source, and then turn that energy source into Bitcoin. There's a lot of ways in which you can fail and you can lose a lot of money. And so the more energy that the network has, the more it's spread out, the harder it is for one person to come in that find an energy source where they could really extract a significant amount of the energy from the system and then kind of attack Bitcoin through that vector. And so the energy is very important for Bitcoin's overall security. What we're seeing right now, kind of around this sort of green narrative, is politicians and institutions that are saying that Bitcoin's energy consumption is unhealthy for the environment, and so a lot of the cases they make are, I think, not very honest. They come from, I think, either a place where they maybe do not fully understand how Bitcoin operates, or they're, I think, deliberately trying to attack the network. And so ultimately, what we're seeing with the Bitcoin network, and when you have, if you're thinking, from the perspective of a miner, where your ability to make money comes from, collecting Bitcoin at the lowest possible price, you want to go to areas where the ability to extract energy is as cheap as possible. And so in a lot of cases, especially what we're beginning to see like in the United States, what we saw in China as well, is that a lot of this extraction comes into places where the energy itself is stranded, It's already renewable. So for instance, China, one of the major reasons that China had so much energy was because they had so many dams, they had so many rivers, and these all created energy, but then they had no city next to it. And so these miners would come in and they'd take that energy and they'd bob it into Bitcoin. In the United States, what we're seeing is movements around flare gas. So you have these oil companies that go in and they're out in the middle of nowhere. And basically they strike black gold and the gold starts coming up out of the ground, right? This oil comes out of the ground. And with that, there is natural gas that comes out of the ground as well. And right now, the government kind of mandates that with that gas, because there's nowhere to put it, and natural gas is very, very difficult to kind of move around. In fact, energy itself is very, very difficult to move around. We don't really have good ways of storing energy. So you can kind of see that like in our phones, right? Where our phones increase at a ridiculous rate as far as like how much capacity they're able to kind of show as far as just information and speed. But the batteries themselves, we don't really see a lot of increase in their capacity. So energy is very difficult to store. And so with this natural gas, basically there's no way for them to store it, but the government mandates that they need to do something with it. So they're required basically to flare it. They just put a match over it and they catch it all on fire. And so it's just a major waste of this energy. And so the cool thing is that now we can have Bitcoin miners come in, we're able to capture that natural gas and convert it into Bitcoin. So what happens with these oil companies, and one of the reasons that Exxon is interested in Bitcoin, is that they're able to basically turn what was originally an expense on their balance sheet into an asset. And so what this does is it does a few things, and this is what I think the regulators don't quite understand, is one, because people are seeking the lowest cost of energy, they're absolutely first going to be pushed towards renewables. They're going to be pushed towards areas where you have stranded energy that we're not going to be able to get anyways. But then it also allows for our energy grid, to be more robust, where basically, and so you could look like at an area like Texas or California, where we have these freak weather patterns that suddenly happen. And all of a sudden, everybody, like in Texas, everyone needed their heating, right? Because there's just a freak snowstorm came in and everybody needed their heating. Well, the energy companies were not ready for this once in a lifetime event. And so they basically had to cut off energy. There was just not enough energy to go around. And so the reason that this happens is similar to, I think, what we've noticed because of COVID with our supply chains, where we kind of have this last minute supply chain that we live with. We do the very same thing with energy. If you're an energy company, basically what you're doing is you're looking and you're saying, how much energy does this area that I have to service produce within a given day? What is that average? And I want to hit that average as often as possible, because if I overproduce energy, I waste money. If I underproduce energy, I waste money. And so these companies have to make this very, very fine balancing act where they basically are unable to overproduce energy for these freak incidences. But of course, during these freak incidences is when we need energy the most. And so with Bitcoin, it can now come in, and as an energy producer, you can say, I'm just going to produce as much energy as I want, and I'm going to take the excess energy that I produce every day, and I'm going to feed that into my Bitcoin mining operation, and I will make money for that.
And really, the reason why it takes so much energy is because of the computing power in order to make the Bitcoin happen, right?
Yeah, and the way that you can kind of look at that is so the Bitcoin miners, what they're doing is they're basically solving this complex puzzle, and the more miners that are involved in that puzzle, the harder that gets. And so you can kind of think of it as, and this is dictated by Bitcoin's kind of constitution, and so kind of the way you can think about it is, if you and me are the only people in the world mining Bitcoin, the way that we would do it, if we were computers, but in our reality is we would both have a die, and we would just start rolling that die. And once somebody hit a 6, we would get rewarded in Bitcoin. And so it's just kind of this randomized operation where it's, we roll dice until somebody hits a 6 and then boom, Bitcoin. If all of a sudden 10 more people joined us, we'd have to adjust the difficulty. We'd have to adjust the rules. So now we're all rolling 2 dice, and we have to get 2 sixes 3 times in a row. And you can just continue to adjust this more and more, and make it as hard as possible as you get more and more people. And then let's say a few people leave, we can readjust it down so that we basically hit this sort of, this, I guess you could say, like an average, a beautiful average.
Mm-hmm. Okay. And so how many miners do you think are working at any given time?
Quite a few. Yeah, it's a very large network. And at this point, especially considering what we've seen with China and just the number that have left the network, and that the Bitcoin network just continues to operate fine and normally, it's very significant. Yeah.
And the people with the computing power have the ability to create this Bitcoin, and then they can put it on the market, essentially, and then eventually transfer it into dollars, US dollars, whatever dollars that you decide that you want to convert it into. Or you can also spend your US dollars and buy Bitcoin.
Yeah,
so you don't have to be a miner.
Right, yeah, and that's the way that I think a lot of people get involved with Bitcoin, is they're not doing it from the mining side. The mining is, I think, kind of this mystical aspect that everybody wants to know more about.
Yeah.
But for most of us, we get involved just by purchasing Bitcoin.
Right. Yeah, and there's lots of different apps that you can purchase it. And you showed me one, Strike, I think it was.
Okay, so Strike is kind of different, but you have like apps today for like Bitcoin specifically. You have companies like Swan Bitcoin, companies like Coinbase, and others that have been around now for
Cash App, I think.
Cash App allows it to. You can even purchase with PayPal, though I don't recommend that.
Right, sure. There's a fee involved, lots of fees.
Yeah, lots of fees. Strike is actually, now that I think about it, Strike has just started. I don't know if it's going to be this week or next week, but they will be allowing Bitcoin purchases on their app. And the really neat thing is they've actually found a way to get you Bitcoin feeless. So you can now purchase Bitcoin for essentially no fee at all.
Wow.
And that's probably a large game changer in the game as far as where we may be purchasing our Bitcoin in the future.
No, I've definitely transferred some Bitcoin to my housekeeper. We set up a thing for her, and she, not always, but and of course when it goes down, she lets me know. But I think it's fun to involve and include others and see how you can utilize Bitcoin to your advantage and watch it grow, watch it go down. And like you said to me before, you just have to get used to the volatility because it is up and down and all around, right?
Yeah. And as much as it hurts to watch your investment kind of halve in value, it also feels really good to watch it quadruple in value.
Right.
And so that volatility is kind of par for the course with Bitcoin. And you have to learn to weather those 50% drawdowns in order to really benefit from the larger bull markets that we do see.
Yeah. And you've heard, I just remember stories of people saying, oh, I lost my hard drive. I don't know what my Bitcoin password is. And I don't have it. And people looking for it. And if only they could find it. And if they had sat on it for all this time, where would they be now, right? If they had one Bitcoin back in when did it start? When did we get started?
2009.
Yeah. So if they had that one Bitcoin now, I mean.
Yeah. And that's kind of like growing pains of the ecosystem. A lot of these people basically purchased what you could consider as pocket change at the time. And so it wasn't a significant investment, and they weren't really looking at it as a significant investment. And so they didn't protect it like it was a significant investment. Yeah. Today, if you own 10 Bitcoin, 1 Bitcoin, even at this point, 0.1 Bitcoin, you do treat it with a lot more respect. And you think, I need to make sure that I am holding this in an appropriate manner. And I actually kind of would relate it to collecting collectible cards, or games like Magic the Gathering, where you have this community that when it first started, a lot of the cards that were printed, even within the printing themselves, they were like, you can, if you lose this game, you have to give this other player your card, or you have to rip it up, or whatever. And so people were playing this game when it first came out, and playing on floors and, at
basements,
at expos and things like that. And today that player base every card they get, they double sleeve it. They put it in a whole bunch of sleeves and they protect them and they keep them in binders because there's this understanding that inherently the value of this asset could go up over time, and I shouldn't be putting this on a dirty floor or bending it or, putting it in my pocket.
Yeah. Used to think baseball cards would be worth some money. That my husband kept a lot of them, but anyway. But yeah, and so now other things have taken off. Like you mentioned your Ethereum. Say it again.
Ethereum.
Ethereum. Thank you. And other like the Dogecoin and all these other ones have kind of started to come up. And you said that you don't necessarily want to invest in those, and they're not as, I guess, the same as what Bitcoin is. I mean, tell me a little bit more about all these other ones that are popping up, and what interest or value should people take in that or not?
Yeah. I think largely it comes down to, for me, it came down to really understanding why Bitcoin was created, what problem it was trying to solve, and then ultimately kind of what is money. Because a lot of these other projects are basically trying to solve a similar issue, but they're not solving it from, I think, what is maybe the purest of sources. So, and this kind of goes into like, I guess, like the philosophy of money. But if we were trapped on an island, it was just you and me. Yeah. We hop on a boat and the boat crashes and we're stuck on this island. Money doesn't matter anymore, right? It doesn't matter how much. It doesn't matter if we brought a suitcase of cash to this island. We no longer need it. And so at small scale, money is a completely useless metric. If there's just a couple of us on an island, ultimately what we're doing is we're exchanging favors. We're exchanging favors to increase our reputation.
We're bartering.
Not even, yeah. I mean, yeah, kind of, but I would say it's even more, even deeper than that to an extent, or even more basic. It's basically, I'm going to go collect the water and you're going to start the fire. And when I get back, we're going to make food, and if I get back and you didn't start the fire, I'm going to start thinking about eating you. I'm going to start thinking about like, how do I get rid of you, because you're now becoming a liability. It's similar to like if when you're hanging out with your friends, if you have that friend who always crashes on your couch and asks you for money and then never really pays you back in any way, whether with attention or affection or just being a good person, you ultimately say, I don't need this person in my life, and you get rid of them. And in that case, it's not a monetary transaction, it's a reputational transaction. It's this person, I give this person things and they don't reciprocate, and their reputation to me has been lost. And so on this island, we kind of create this favor-based reputation system. And as more and more people, let's say this is just a magnet for boat crashes, as more and more people crash onto this island and our island gets larger and larger, the number of people that are on here, we no longer can really keep in our minds what we owe to one another, or kind of whose reputation is important within a society. If there's 1,000 people on this island, I no longer know if I go and fetch water, if Lisa, who just came on this island yesterday and who I don't know at all, is actually going to start that fire. And so we now need to essentially take, we need some sort of asset to essentially take the place of this reputation system. We need some sort of token to begin trading back and forth. And so that's where you begin to get the basis of money, is we basically find this thing that can represent the favor that we've already done for somebody else. It becomes this representation of, I have done work in the past and somebody gave me this asset, and now I'm going to use it today to get work from you. And in order for that asset to really work, it needs a few things that are very, very important. One is it needs to be divisible. So you need to be able to take it and break it down and put it back together. And it can't be an NFT. It needs to be fungible. It can't be non-fungible.
Yeah. Well, that's what NFT stands for, by the way, for those who've never heard of it. Yeah.
Right.
Non-fungible token.
Non-fungible token. And so you need something that's actually fungible, and that you can break it down and then you can put it back together. You need something that's saleable across time. So it has to be, it can't be something that slowly deteriorates over the course of a week or a month or a year. It needs to really be hard and set in stone and not degrade. And then it also needs to be scarce. So like something, if we're on this island and we're looking around and we're saying, all right, we got 1,000 people here, what is our token going to be? What is our currency going to be? We're not going to use sand. The guy who starts the lemonade stand on the island isn't going to say, yeah, sure, give me a bag of sand for my lemonade, because he's like, there's plenty of sand here. I don't need this, even though it's roughly pretty fungible and you can divide it pretty well. And I think you could also say that it stands the test of time. We're not going to be using leafs. We're not going to be using probably quite a few of the things on this island. But let's say that basically on this island, we're trying to find the asset that's going to be the most saleable across time, the most scarce, the hardest to reproduce. And that's a big one, is something that once we figure this thing out, we can't have somebody sitting in a corner and beginning to forge this new currency of ours, because then it completely breaks down our reputation system. And once you break down our reputation system, we no longer can trust one another. We can no longer create goods and services for the society. And this island goes from being a paradise to being hell pretty quickly.
Well, and then the only thing is that you have to have internet, right, to access the blockchain. But the reason why blockchain is so infallible, though, because if you don't have internet in one area, it still exists somewhere else, right? I mean, that's kind of the idea behind that, right?
Yeah, and what I've found is I think that it actually provides some pretty good arbitrage opportunities for people that are living in areas that maybe do not have a strong economy. So for instance, I grew up in Albuquerque, New Mexico, and Albuquerque is not really known for their business community. New Mexico is one of the poorest states in the nation. And what I've noticed just personally is I had a lot of friends that had a very difficult time getting out of Albuquerque. So they had these plans or these desires to want to go to Los Angeles or wanting to go to a larger city. But the cost of living was so large that they couldn't really make that jump. And so they were kind of stuck. And of course, we see this on much kind of larger scales, say in third world countries, where they don't really even have the opportunity to leave that country because they just simply do not have the monetary resources to do that. And there's no way for them to participate in their local economy to kind of get there. And so Bitcoin, by being this sort of digitally native asset that you can access from anywhere in the world, it gives you this arbitrage opportunity where you can basically opt out of your local economy and opt into a much larger economy that can see growth.
As long as you have your account number and your password, then you're good.
Right. Yeah.
To know what you bought and where you purchased it and how much you got and what the value of it is. Yeah.
Well, and the cool thing about Bitcoin too is it's not necessarily an account number. I mean, you can purchase Bitcoin, and most of us do purchase Bitcoin on an exchange like Swan or Coinbase or Strike soon. Mm-hmm. But you can store it outside of any of these exchanges because it is an asset that exists outside of these exchanges. The exchanges popped up to serve the asset, not the other way around. And so you can keep your Bitcoin on a flash drive. You can keep it on a piece of paper. And it kind of acts as this deeper form of security, I think, than the sort of the legacy institutions that we have today, where in a lot of cases, in order for somebody to attack your Bitcoin personally, they'll have to understand how your setup operates. And there's some ways to really get into the weeds and create a setup that's very easy for you to access, but very difficult for somebody else to. And that's kind of different than the centralized institutions we have today, where you get these hacks all the time where they just leak so much data. And so it's only a matter of time before a lot of these institutions, because they are just this one centralized vector for attack, probably end up breaking under these sort of small assaults. You can almost think of it as kind of the fall of the Roman Empire, where they got so large that they were unable to kind of protect their flank from barbarians. And the barbarians just slowly started to eat away at the sides of their civilization. And I think a lot of these large institutions are kind of beginning to feel that too, where a hacker from some podunk town in the middle of nowhere in some other country can get access to these databases if they just press the right set of keys.
Right. Yeah. And that is happening more and more with cybersecurity and, the things that are, I don't know, I think I just got a notification for something that my username and password is compromised and I need to reset my password. I mean, that happens all the time now. You're right.
Yeah. Yeah. In fact, I've been on a few lists that have been compromised, and my my email gets DDoS'd all the time now, where I'll have somebody, I don't know how they do it, but they sign me up for 100,000 subscriptions, and all of a sudden I can't use my email for 2 days because every minute I'm receiving 10 or 15 emails.
Yeah, I can relate to that too. Oh my gosh. So many emails, that's for sure. Okay, so let's talk about how this is related to marketing, since we are on a marketing journey. How do you see in the future Bitcoin being used more in, like you said, the institutions, but being able to purchase things, or, like you said, the goods and services that you can exchange for utilizing Bitcoin? When we look at how to market the goods and services that everyone consumes, and, in a marketing perspective, we want people to consume, but how do you think that the transition of people being able to utilize Bitcoin more is going to affect how people do business together?
Yeah, I think you should look at Bitcoin as a network. And so everybody who holds Bitcoin is a part of this network. And we're seeing more and more often now that people build businesses and products to essentially interact with this network and to essentially monetize that network. And so I think the deeper that you understand Bitcoin and the community around Bitcoin, the easier it is for you to essentially create products and services that can cater to their needs and interests. And it's a very interesting community in the sense that you're dealing with a community that owns an asset that over time its value goes up. And so they are hesitant to spend their money. And, right, that's both a good and a bad thing, in the sense that good is you have a very high moral conviction in the Bitcoin community. I think actually, I was recently at Bitcoin Miami, which is the largest Bitcoin conference that maybe has ever happened. Oh, wow. There was about 10,000 people there. And what I found so astonishing is that the majority of people there had extraordinarily high moral values. Everybody I met at the conference was very purposed and interesting and engaging. And, I think I've at least been to a lot of conferences where you just meet people and you're like, I don't want to talk to this person anymore. Get me out of here. That was not the experience that I had at this conference. And a lot of people take very good care of their bodies. It was amazing how many of them were like just ripped.
Right.
Cool. And so I thought that was really interesting, because you're looking at this sort of financial asset that's causing them to completely change the way that they live their lives and interact with the world. And so the products and services that Bitcoiners are interested in are very, very different than the products and services that maybe the average individual would be interested in. And as I think the Bitcoin network grows, I think we're going to see a change in the culture as well. And you're going to see a shift towards some of these other interests that maybe the Bitcoin community kind of is an advocate for, which is these ideas of sustainability, these ideas of kind of self-discipline. And so, yeah, so when it comes to marketing to this kind of community, it's not about marketing fads or marketing some sort of get rich quick thing. It's very much about trying to give them a value that could outpace the value that they've received by holding Bitcoin for the next 10 years. And that's a difficult task, but if you can figure it out, then you'll create a $1 trillion company for sure.
Well, let's see. So what you're saying is that I should accept Bitcoin as a currency in our business then.
Well, and this was always kind of a different sort of thing, right? Like it kind of goes back to, I don't know if we fully wrapped up this avenue, but it kind of goes back to like, what is the purpose of Bitcoin? Is it an asset that people want to sell, or is it an asset that they want to hold? And the largely the Bitcoin community said, this is an asset that we want to hold. Mm-hmm. It was something that I figured out with the business that I ran, is, we'd created this currency, we created this asset that people expected would go up in value, and so they didn't actually want to use it to interact with our project, and that really tanked the project. It was like, well, we created this project so that you would interact with it, and you're not doing that because you think, you want
to keep it.
Yeah. And so with something like Bitcoin, I think ultimately it's less about necessarily, and now accepting Bitcoin never hurts, because as somebody holds more and more of their net worth in Bitcoin, or uses Bitcoin as their unit of account, Bitcoin is very easy to send to somebody to purchase something. And especially now that we have things like the Lightning Network, which is kind of a layer 2 solution on top of Bitcoin that makes it so that you can buy coffee with Bitcoin. You really can do these transactions at the speed that you could do a Venmo transaction. But typically today still there is simply just hesitancy, because there's also this tax issue of like, if I purchase your product with Bitcoin, I now need to tell my accountant that I bought $100 worth of X, and now I owe taxes on it if I had a gain. And so it's kind of easier, I think, for a lot of Bitcoiners, and kind of what I do as well is we have our Bitcoin position, our holdings that we don't intend to sell, and we keep it in very cold storage that's very hard for anybody to access. And then we hold cash. We have a bank account with dollars, and we use that for our day-to-day spending. And it's not to say that I don't purchase things with Bitcoin. I've paid employees in Bitcoin. But I personally just prefer to use cash for these sort of day-to-day transactions, and use Bitcoin as a means of storing my work so that I can get more work in the future.
Oh, nice. Yeah, we didn't talk about taxes. That's the other side of this coin is the amount of taxes you have to pay if you do have a gain. So that makes sense.
Fortunately, because of the way Bitcoin is looked upon by the tax man here in the United States, you can, if you hold Bitcoin for longer than a year, get long-term capital gains treatment. And so that does kind of drop your Bitcoin bill quite significantly. If you hold it for longer than a year, if you have a large gain, you can sell it and you're paying much less in taxes, which is actually an interesting thing about gold, is gold's tax is a completely different thing. And so even if you hold it for your tax rate, even if you make $1 on it, is still like 30%. And that's not something you see with Bitcoin. So that is fortunate, but that is something. And one of the reasons that I typically don't trade a lot of other assets, trade out of Bitcoin into these other currencies, is that every time you sell your Bitcoin for some other currency, that is a taxable event. And so you can get into this situation where, and I've had this happen when I first started, where you basically have to pay more in taxes than you ended up earning, which can really hurt.
Yeah. Oh no, that's not good. No. Okay. We'll wrap it up after this, but if somebody looking to get started in Bitcoin who's not done it before, what would you tell them? What would you say to them, and why they should do it?
Why they should do it.
And how?
Yeah. I think the why ultimately is when you're looking at kind of, I think, the forces that are kind of taking place today. Some of these, what I think is, I think what we're seeing a large roll up of power, really across the world. And so we're seeing the centralization of power. We're seeing really an attempt to kind of take the individual out of the equation and kind of put you into a box with a whole bunch of other people and tell you, this is how you behave now. And the only asset that I know of, really, outside of like physical dollars or holding gold, is that allows you some insulation from this sort of machine, is Bitcoin. And so some of the major fears that I think a lot of us have, especially as we're kind of like realizing, wow, gas is going up, all of our prices are going up, is, are we headed towards inflation? Are we headed towards this sort of world where we're going to see 5% inflation a year, and the value the value of our money starts to go down? How do you protect yourself from that? And it's not as simple as working a 9-to-5 job and storing it in your bank account and hoping that money is going to be there when you're ready to spend it. And so I think ultimately a lot of people can treat Bitcoin as a secondary savings account, and they can just say, I'm going to take $100 of my paycheck every week and I'm going to purchase Bitcoin with it. And hopefully over time, what that will do, especially if we're seeing these trends continue with these power grabs, what you'll see is you'll have more autonomy. You'll have the ability to be more adaptable as I think the world really, really begins to change over these next few decades.
Right. And they always still say, buy low, sell high. So it still applies to Bitcoin, right? When it's low, you want to buy.
Right. Yeah. Yeah. And we're probably in a really good opportunity to purchase Bitcoin right now. We saw earlier this year the price get up to $65,000. Today it's just below 30,000. And so so you've seen this large volatility to the downside, and over time that tends to correct upwards.
Yeah. You've seen this before, though, where it's dropped and
yes,
rise and up and down again. And so you've gotten used to this volatility.
Yeah. You can never quite get used to it, but you learn to, I think, be a little more stoic.
Yeah. Right. You get through it. Yeah. Well, thank you so much for sharing all of this wisdom with us. And so those of you who are listening and want to learn more, Clay, how can they learn more about what it is that you do?
Yeah, you probably find me on Twitter. My handle is Clay_space.
Yeah, last name, space.
Yeah.
Very good. Any last thoughts that you have that we would like to share with our marketing expedition audience? No, I don't know. If you had anything that you feel like we missed. Oh, no, I think it was great. You gave us lots of nuggets to consider, and maybe we'll have to rewind and play again so you can catch all of it. I love it. Thank you very much for coming out here to the Pepper Shock studio and taking a tour and sharing what you have to know about Bitcoin and all of the experiences that you have. And I might mention, you're only like 20 something.
25.
Right? Yeah, 25. So you've learned a lot within the short amount of time. So super, super awesome. And I'm really proud to know that you have done all of this and have gained all of this knowledge to be able to use to your benefit and now do venture capital and investing in other things. Well, let's just real quick share a little bit about what you're doing.
Yeah. So kind of my investment thesis, and I've actually written an article about this I can send to you, is kind of this hedging strategy. It was popular. It's called barbell investing. It's kind of popularized by this guy Nassim Taleb. And it's this idea of you want to trade the two extremes and then not really have any assets in the middle. And so when I look at the assets that I'm holding today, an extreme asset would be Bitcoin, as far as like it is an international asset. It's something that you can get access to anywhere in the world, and so that would be on one extreme of the barbell. And the other extreme of the barbell would be hyperlocal. So it would be investing in the town that I live in. And so my goal is to avoid investing in the S&P 500 or Amazon stock or anything like that, and instead diversifying into my city and into my town and helping hopefully grow the entrepreneurial base here in town as well.
Yeah, and so what is it? It's a coffee shop, right?
Making
coffee?
So I've invested in a coffee company, and then I'm also working to kind of bring together the and this is with a few of the other guys in town, to kind of bring together the venture capital folks in town into sort of a more formalized structure, so that we can get better access to deals. We know kind of what's going around town. And hopefully what it eventually becomes a place where entrepreneurs know that they will be able to start their business and grow their business in Boise instead of having to take it out to Seattle or Los Angeles.
Awesome. I love it. You'll have to share more when you get all that put together. I think that's great.
Yeah.
Yay. Well, Boise keeps making a lot of top lists for, best place to live and all that kind of good stuff. So
yeah. Well, and we have 3 of the fastest growing cities in the nation.
Right.
In the top 10.
Yeah. Here in Idaho. Who knew? But, well, thank you so much for sharing. And, we'll be sure and follow you on Twitter. And I think I do. And for our listeners, of course, the best thing that you can always do for us is give us a review and share it with others if you enjoyed the content today. And until next time, enjoy the journey.
Thanks for listening to the Marketing Expedition podcast. Find more online at peppershock.com. Wouldn't it be great if there was one place you can go to get all the latest information and tips about marketing and advertising? The Marketing Expedition community is that place. People like you gather in our online community to build relationships with others and find the latest marketing trends, tactics, tools, and technology. We help you build your brand and your bottom line. Start your adventure today. Visit themarketingexpedition.com to find out more.